Hi, this is Fred. I'm a hedge fund manager running a long-short hedge fund. Today, I would like to share about our view regarding the key characteristic of a hedge fund manager. We have many friends working in this industry. We have visited. We have not friends from US, UK, or China. Of course, each fund managers have their own characteristic. However, we can generalize into some of the common paths. That kind of personality. The first part is the independency, and a lot of them are contrarian. Since we will meet a lot of management, the listing companies management, and we also we will meet up with we'll talk to those research analysts, the investment bank analysts. So a lot of information coming in, and it depends on how we digest those information, and we always need to remain objective and to come up with an idea to invest. So most of the time, the company management will be more inclined to be more bullish and talking about how good the company will be, and after 3 years, after 5 years, how will the market goes, and how will the market go, and how the company can position well in that kind of trend. And analysts, some of them with sell recommendation will be biased to talk about how bad the company is and why we need to sell immediately, sell the stock immediately. So to be a hedge fund manager, we need to be objective. We need to be very calm, and to do some due diligence to find out what is really happening in the in that sector, in that industry sector, and in that company, and what should we do. And we are to some extent we need to be a contrarian, to act against the momentum, to act against the market trend. So sometimes we need to be very clear about what we are doing, about our action. So second point is flexibility and speed. Flexibility and speed means that when we are wrong, when hedge fund managers have make a wrong decision, they need to correct the mistake immediately. This is something Soros always talk about, and a lot of hedge fund manager always talk about. I think this is really important to correct the mistake. So most of the time we do another homework before we invest in a stock. When we found we are wrong, then we correct. First we admit the mistake and find out more about why we ran wrong and how to correct the mistake. So sometimes we will go from long to short position, and from short position and back to long position. Sometimes it is because of the catalyst timetable. We need to be flexible. We need to be to act fast on the script. So I think flexibility is quite important, and speed, of course, it's a matter of. So the third point is the trader style. Of course, we can have a lot of a study about one company or one sector for long, but eventually we need to have a conclusion, and this conclusion is not only about the valuation, about the fundamental of the company, and we also incorporate and bring in the fund flow idea, the micro fund flow and the macro fund flow. It's not only about the PMI figure of a country, about a non-farm payroll number, how big is the QE for this round, blah blah blah. This macro fund flow that will lead to macro fund flow. The bond and equity switch, the emerging market and developed market fund flow. This is macro fund flow, or country allocation, the fund flow between countries. We also look into micro fund flow. Micro fund flow means that we need to take care about the company, within that company, within that stock. What is the fund flow within that stock? So maybe I will talk more about that later on. So trader styles incorporate all these ideas, the fundamental, the fund flow, into the actionable idea. This is something very important, because at the end of the day, we need to be we need to make we need to make a wise decision, a smart decision, and to some extent it is something like miniskirt, something like miniskirt. So to make it short, to make it sassy, and to make the actionable idea become profitable and monetize the miniskirt. This is the idea, one of the idea that we would like to share with you. Thank you for watching.